In this video, I will share with you what is a temporary bridging loan, how to use it properly to grow your business, and for those business owners who think that you don't need a loan, you should really watch this video because you will have a change of mind. Disclaimer here, I am not a financial advisor. I am merely sharing my own experience tapping on a temporary bridging loan as a SME in Singapore. Whatever I'm sharing here in this video does not suffice as professional financial advice. So if you are taking a loan, please speak to a professional such as a banker or loan broker to assess your situation. Okay, so what is temporary bridging loan? As SMEs in Singapore, we are actually quite blessed. There are a number of schemes introduced by the government to support us SMEs. TBL is one of them. I'll just call it TBL for short, temporary bridging loan. So if you borrow money directly from the bank, they will charge you pretty high interest rate because they don't know whether you will default the payment or not, which means whether you will run away or not. And their risk is high. With this TBL scheme, government takes on 70% of the risk of default, so the banks are able to offer the loan at a lower interest rate to us. This temporary bridging loan has recently been extended to September 2022, so if you're watching this video, you can still take the temporary bridging loan. The best part about TBL is that you can borrow from multiple banks, so even if you have already borrowed, you can still apply to other banks for more money. Or you can go to a loan broker to help you submit the application, but they will charge you a percentage of the loan or about 2k-ish. According to the official statement, you can borrow up to 1 mil, but among those people I know who have gotten the loan, some of them got 200k, some of them got 500k. It really depends on your financial standing, such as the profit you made last year, the cash you have on hand, and so on. But either way, 6 figures is a decent amount for SMEs. Now, many SMEs do not want to take the loan because they do not know what to do with the money, especially if they are in a cash cow business to begin with. However, if you use the money strategically, it can help you to make more money. Here are 3 ideas for you. First idea, use the money to fund your digital marketing campaigns. When you run digital marketing campaign, you need to pay Google, Facebook ad budget. Of course, you don't usually start with a 6-figure ad budget, so you don't need to use up all your loan money. A low 5-figure ad budget will give you a very good runway. From there, if your campaign is doing well, you can always scale up the budget higher. The loan amount will only be for the purpose of getting your campaign started with the initial funds. You don't need to keep borrowing money in order to run a campaign. Because after you run the campaign for a while, it becomes self-sustaining. The campaign pays for itself over and beyond. The typical ROI, return on investment of a campaign, is between 200% to 500%. So how fast you recoup your investment on ads campaign is very dependent on individual business. Some businesses have long sales cycle. For example, the time it takes for them to convert a lead into a customer might be 2 to 3 months, and the cash will only come in after. This is why they may use the loan amount to kickstart the campaign. Once the customers start to come in, it is self-running. If you have a functioning campaign, the ROI is between 200% to 500%, whereas your interest payment on the loan might be between 3 to 6% per annum. You do the math and you find that investing in a digital marketing campaign is a no-brainer. Furthermore, the ROI is only the upfront returns. We haven't taken into account the future returns. For example, the initial group of customers that come in from the campaign would repurchase or would give referrals, increasing their lifetime value. Not to mention, there will be positive reviews for your business, which would also attract more new customers. I would say from an investment standpoint, digital marketing is great, also because I'm a digital marketer myself. Secondly, investing in property is also a good idea for businesses with extra cash on hand, specifically commercial property. In fact, property investment trainers in Singapore are teaching their students to set up shell companies just to invest in commercial properties. Given that as business owners, we already have a registered entity with financial movement, it is much easier to get commercial property loan from the bank. Some of my friends use their temporary bridging loan funds to pay the initial deposit for the commercial property and finance the balance 75% using a property loan. Some businesses buy the commercial property for their own use. Some will set aside part of it or even the whole office for rental income. However, to make this work, we have to do careful calculations. Commercial property rental yield in Singapore is around 5% according to Property Guru. After you take into account the interest of the temporary bridging loan as well as the interest of the commercial property loan, you might be left with very little. Also, do take note you have to repay the TBL within 5 years, so your business has to be making enough money to pay off the TBL as well as the mortgage loan. Next, if you're buying a commercial property for your own use, it also makes financial sense. It's the same reason why almost all Singaporeans buy their residential home instead of renting it. The landlord may raise your rent all the time, which is what we experienced this year. So if you have extra money from TBL, it's also a good idea to pay for the down payment of a commercial unit. Furthermore, Most people would agree that property prices in Singapore would keep going up over the long term. Having an asset like a property can provide a good hedge against any business risk. Some people choose to invest in stocks or unit trusts or bonds with the extra cash from the TBL. This is fine as long as the dividends from your investment can offset the interest cost you are paying the bank. High risk, high returns. In this climate, if you're getting 4% return from the stocks, it's already very good. You probably won't get rich by investing in stocks. As my financial advisor says, the best investment is in your own business. The returns from property or stocks will definitely be insignificant compared to the returns of a digital marketing campaign, which can go up to 200 or 500%. Thirdly, invest in your business advantage. This will be dependent on your business and industry. For example, some of the tuition centers I know invested in a learning portal that can allow students to practice unlimited questions. Other tuition center has a fully equipped science lab or interactive smart whiteboard to enhance the learning experience. All of these initiatives require capital and creates a certain barrier for their competitors because not every business can make that kind of investment. This can be an advantage if you use the TBL to create this barrier. One of our clients, PSB Academy, has invested in the latest edutech facilities, which includes the virtual reality and flipped classrooms concepts to create the wow factor. This allows them to stand out in the marketplace immediately. Here's the thing, the returns of the investment may not be easy to measure or quantify, but there are a lot of ripple effects when you invest in your business growth. For example, when we run digital marketing campaigns for these clients with a wow factor, they get better results. Their click-through rate increases, their conversion rate increases, and their ROI increases simply because they attract more attention. Marketing is about standing out in the crowd. Ultimately, the most successful campaigns are those whereby we are marketing a real USP rather than using fluff. So consider using your TBL to create a real business advantage. You can invest in a cool technology like those mentioned just now, or you can invest in a software to make your operations more efficient and serve your customers faster. These investments will pay off in the long run. In my opinion, this is the best way to use your loan to grow your business. Most fast growth businesses know how to leverage on capital market to grow fast. They have a lot of funds at their disposal to take advantage of opportunities. As such, they have an unfair advantage against their competitors that are just growing organically using money from their own pocket. Taking loan is part and parcel of running and growing a business. It is something I gradually begin to grasp along the way. A lot of startups will go out and raise money these days in order to build a revolutionary product to disrupt the market. They give out a portion of their equity to obtain the funding. However, you might have heard of the saying, equity is more expensive than debt. This is because equity is permanent. Once you give up your shares, it's very hard to get it back. And your business is also subjected to the control of your investors. Whenever possible, you should take out a loan rather than sell your shares. This is why temporary bridging loan is a great scheme that every SME should tap on in order to grow their business. A very important note about loans, loan is not for poor people. I don't know about you, but I grew up being very conservative. My parents and grandparents reminded me all the time not to take loan and not to go into debt at all costs. A lot of us have this narrative in our head that loan is scary and loan is bad. That is, however, a myth. What is truly scary is stagnation. In business, competition and new players are always pitting against us and we have to keep moving forward. As Tony Robbins said, a business is either dying or growing. There is no middle way. It is stagnation that must be avoided, not loans. Furthermore, when you borrow money and return the money, you are building up your credit worthiness. This may make it easier for you to borrow money when you really need it the next time. If you have never borrowed before, the banks have no record of your business, it's harder to borrow money. So there shouldn't be a stigma around taking business loans. But make sure you maximize your funds with the 3 ideas I just gave you. Don't let the money go to waste. Thanks for watching this video. Do like, subscribe and press the bell notification so that when new videos are released, you will be notified. I'll catch you soon.